Hey everyone, welcome to the live. Today we're going to be chatting about a couple different things here. I got my list so I don't forget. We're going to be chatting about some of the capital gain changes, specifically to the US, or sorry, to the Canada. In my opinion, US has some more favorable capital gains terms. But first off, let me know if you can hear and see me. If one of my team members in the chat, yeah, let me know if you can hear and see me. Guys, I'm going to open up the chat right now. If you have questions, because we're going to be doing Q&A, don't be shy. But yeah, I want to talk creative financing. I want to talk other people's money, which is Mel and I our go-to when we're buying income-producing assets. And then also want to discuss, we do it with no joint venture partners, right? That's kind of our specialty is we keep 100% of the ownership, 100% of the decision-making, 100% of the equity. And actually, you know what? I'll tell you a story. So think about right now, interest rates are a little higher, right? There's a building that we just refinanced. Well, we refinanced the building I'm in right now, but there's another building that we refinanced. And we hadn't refinanced it since 2021. Hey, Anish, can you hear me? We're all good? So think about this. If I had a joint venture partner, right? Mel and I wanted to refinance it. Mel's older daughter's going to school. Other things were going on. We renovated the house, renovated the cottage. And we're like, you know what? We have this asset sitting there. That entity owes us money. Why not take it out tax-free, right? Because the way we're set up. So we refinanced it. Now, we all know that interest rates are higher right now than they were in 2021, right? Was it 2020 or 2021? Doesn't matter. But my interest rates were much, much lower. And Mel and I made an educated decision. You know, we don't have to pay a penalty because the term, no, actually, we did have to pay a little bit of a penalty because it was still within term. But we decided with the penalty and with the higher interest rates, it still made sense to pull out the equity. Thanks, Anish, for letting me know. Now, think about this. Mel and I, well, we don't own anything. Our entities own it, but we made the full decision to do this refinance. If we had, we did this refinance knowing that it was higher interest rate. We had to pay a little bit of a penalty, but we wanted to take out that equity that was sitting in the building so that we could pay for some schooling, do some house renovations, XYZ, okay? Imagine me trying to present that case to a joint venture partner, right? Imagine me talking to a joint venture partner and saying, hey, listen to this. I need this money right now. However, we're going to pay higher interest rates. We're going to pay a penalty. And our cash flow is might go down depending, again, it depends deal by deal, might go down. That joint venture would say, I'm good, I'll pass on this. And then in my opinion, I would say, well, I need this for my family. I need this to do what I want to do. And I think there would be a little bit of friction there, right? So this is exactly, and I'm just giving you one of the most recent examples of Mel and I of just, again, why we don't do joint venture partners is this most recent event would have been an issue, 100%. Right? Would you want to refinance a place that benefits you? Yeah, you'll get some money out, but you don't need it right now, and you're paying higher interest rates, and you got to pay a penalty. Would you be into that? Probably not, right? But again, everyone's different. It just depends on your life circumstances. So just an example as to why we don't do joint venture partners. Now, if you're new to us, again, Mel and I, we've now purchased over 250 units in 5 different countries, right? Canada, US, Costa Rica, Mexico, Dominican Republic. And yeah, we continue to do so. So if you have any questions, put it in the chat. It's just going to be a general Q&A. I want to discuss the changes in the capital gains that the Canada has announced. I think it was 2-3 weeks ago now, and just how it's going to affect people, right? So, and okay, glass half empty is going to be how it's going to negatively affect some people, if you look at it that way, right? Because, and I'll get into it, but then I'll also spin it at the end where how it will positively affect others if they understand how to benefit from it, right? How to make sure that they're leveraging it correctly, and making an opportunity out of this, right? Oops, what did I just do here? Dave, don't touch anything. Come on, the team set it up, don't touch anything. So if you didn't know, basically, actually, let me start off with how it still is and how, in a couple of months from now, it'll be how it used to be. So effective June 25th, I believe, 24th, 25th, I believe it's 25th. Things are going to be changing for the capital gains rates, again, just in Canada here. The States, in my opinion, has very, very favorable capital gains rates and that type of thing. But so as of right now, you basically, the quick way to look at it is, Once you determine, what you purchased it at, what you put into it. So if there's, capital expenses, right? So the closing costs, the legals, the land transfer, the real estate agent fees, if you put a new roof on, and again, guys, I am not an accountant, so do not take this as accounting advice. I'm not a lawyer. Do not take this as legal advice. I cannot stress that enough. I have 0 letters after my name, okay? However, what I'm getting at is I'm going from experience here. So you purchase an asset, all the capital expenses, a roof, a furnace, those big ticket items, you do windows, again, talk to your accountants about that. The purchase price plus all of those expenses is going to deem, oh, I hear my dog, she's doing something in the background. If I leave at some point, it's because Millie's being silly. But that between your sale price is going to be, quick math here, is going to be your taxable gain, your amount of your capital gain. Now, the way it still is as of right now is 50% of that is exempt, right? I'm talking Canadian Care. So 50% would be exempt, meaning, let's just take some quick, easy math, right? So let's say it's 100K. 50% completely exempt. The other 50% or 50K in this made up example would be your inclusion rate, which would be subject to taxation. Okay, meaning 50K is exempt, 50K would be subject, depending, again, I'm not going to get into it, but depending how you take the income, depending what tax rate you're at, you can kind of do the math here and see what it's like. Now, effective June 25th, if someone can Pura Vida, Dave. Hey, Hugo. Awesome. Did we meet in Costa Rica before, my friend? But yes, Pura Vida, right? Boom. As of June 25th, and again, I'm just talking from what I've been discussing with my accountants and lawyers, and if you want professional info, definitely go see the pros. I am not giving advice here. I'm just talking in general. June 25th, the change that they announced in the federal budget is, let's just take that same 100K, made up 100K example. You purchased the asset, all the money you put into it, capital expense, not all the money, the capital expenses that you put into it, the closing costs, the legal fees, the real estate agents, those things that can attribute to that amount, leaves you with $100,000 between that amount and your sale price. For quick explanation. So that 100K that, before was 50-50, now, actually, I kind of want to do it the opposite. So now the portion, well, no, let's do it the same way. The portion that is now exempt is 33%. So 17% different. So you used to have 50%, right? 50K. That shrunk down now, 17%, right? It shrunk down now to 33, excuse me. So you used to have 50% that would go, hey, completely exempt. Now you're at 33. So you are going to be taxed on, or your inclusion rate is going to be 17% higher. So you just went from 50 to 67% inclusion rate. So now that $50,000 that was then, however you took the income and all that was going to be subject to taxation, that is now 67%. And if you're looking at bigger numbers, if you add the portion of the capital gain that you're going to be taxed on goes from 50 to 67, right? Depending on the size of your asset, well, any amount of money more to the good, to not in your pocket. I'll just say that. No one likes that, right? So that is the change. Now, I'll put a little caveat here. If you're in let's talk Canada, if you're in a corporation, right? Obviously, if you're in a corporation, that goes from the first dollar. Okay, so from $1 to $1 million, whatever, it doesn't matter. It's all the time. Again, talk to the accountants and lawyers. If this is an asset that is personally owned, so let's say, I've got an income property, I don't know, let's make it up. I got a duplex or a triplex, and I have a capital gain of $500,000. So it's personally owned, okay? The first $250,000 will be treated the old way, meaning the 50% inclusion rate, the 50% exempt. So personally owned, 250K gets treated the old way. We'll call it that, whatever. The after $250,000, so let's say I've got a $500,000 gain here, 250K, 50% inclusion rate. The other 250K, right? Every dollar after the $250,000. So in this easy example, that other $250,000 would be subject to the new rules of 67% inclusion rate. So a couple of things here is this hasn't taken effect yet. You still have some time. And I'm just thinking if you guys have questions on this, guys, please put in the chat. I'll answer as best as possible. Again, not being a not accountant and not lawyer. But put some questions in the chat if you have any. So just start doing the math. If you were thinking of selling a property this year, right? If you're like, I might sell something in 2024, who knows? I may be waiting for the market. I might be waiting for the interest rates to go down. Like they keep saying they're going to go down mid-year. Again, no one knows that. Literally start doing the math. Okay, so let's say, for example, and there's going to be a sweet spot. There's going to be a spot where, hey, if the interest rates go, I'll use this way. If the interest rates go down by this much and the value of my asset goes up by this much, you know what? I'm still further ahead if I sell after June 25th than before it, because I'm getting more money I guess I'm paying more tax on those dollars, but I'm actually getting more money in my pocket. Or you might go, you know what? Even if, and who knows, the interest rates might not go down. No one controls that. And you might do the math and go, hey, even if the interest rates do go down and my purchase price goes up or my selling price goes up, I don't think it'll go up high enough to be able to beat out that 17% new inclusion rate, the 67% new inclusion rate. So if you're looking at selling an income property, and I should probably say that, your personal residence, again, they haven't changed it. I haven't seen anything. Hopefully they never change that. But your personal residence, as far as I know, it is still exempt. This is, an income property, an asset like that. So do the math, double check to see if it makes sense. If it does, then hey, you might be okay to sell it after June 25th at the higher price that you want. But you might be thinking, you might be under the gun, right? You might go, oh no, I need to sell this by June 25th or June 24th. Again, I believe it's, June 25th. I need to sell this before then, because even if I sell at this price, that new 17% higher inclusion rate is going to really hurt me. That's some math. Those are the conversations you need to start having. Okay. This can be taken into consideration in your negotiations. I had a deal, I won't get into in specifics because it's very fresh. I had a deal that literally I was saying this. I said, please explain to the seller, because I was doing a seller financing deal. Shocker, right? That's what we do. Seller financing, was it a 2 or 3 year term on that one? 2-year term. Doesn't matter. It doesn't matter. And I'll talk a little bit more about seller financing and the pros here as well. This is a real conversation that I am now telling real estate agents that I'm dealing with, especially, well, in Canada. In the US, it doesn't apply, right? And I'll talk about Ohio and that after, in Florida, about deals we got going on there. But this is literally what I'm talking to them. So I'm dealing with a deal out in Alberta, and I'm dealing with a couple of deals in Ontario as well. And I'm like, I will gladly buy this before June 25th, June 24th. I would have to close by then. I will gladly buy this, and you will still be included, because they're owned by corporations. This will still be included in the 50% inclusion rate, and you're saving 17%. Like, this needs to be in your vocabulary, your negotiations, your conversations, guys. Like, this is we have a window here that you can either make it work for you or work against you. So if you're looking at deals and the seller is saying, no, I'm stuck on my price, you're like, okay, this price here, and again, do the math. This price here before June 25th, and talk to your accountant, do the math. What's your tax burden going to be? If I give you, that same price that you want after June 25th, what's your tax going to be? So let's, you might be able to shave off a couple $1,000s off an asking price, because you now have that window. You just have that cutoff date. So again, if you're looking at being a savvy investor, start doing the math. The savvy, I was gonna say savant and savvy. The savvy investor-focused real estate agents will be able to help you with this, okay? But you won't know, well, I guess you could. You won't know how much they purchased for and how much CapEx they have put into it in regards to their selling price. I guess you could find out what they purchased it for. But just educate people, the real estate agents, and then educate the sellers, or get them to educate the sellers. Like, hey, seriously look at your numbers. If I can close, because we're May 1st, right? June 25th or June 24th is the last cutoff date. It's going to come. It's a month and a half or 2 months away. So if you're using this, start talking the lingo that you need to make sure that people understand that this cutoff date is coming. Now, in regards to, because everyone is like, oh no, the capital gain inclusion rate is higher. It's going to be an issue. I agree. Yes, I agree. Let's all agree here. Someone tell me opposite in the chat here. right? We all want to keep more money in our pockets, right? I'm pretty sure I won't get a, hey, I want to pay more money to the government in the chat, unless it's sarcastic. But what I'm getting at here is this can also be used on the flip side. So for example, Mel and I, we love creative financing, right? We love seller financing. We love using people's registered funds and retirement funds. And actually, you know what? I should almost put a little disclaimer here. We love using them, but we have always paid everyone back on time, have never missed a payment, have never done anything, because the forefront of our borrowing, when I'm looking at a deal, when Mel and I put it in our cash flow analysis matrix, before we do anything, we are exiting that deal. And what I mean by that is we know exactly how we're going to pay the people, the lenders back, multiple ways. If I refi it, if I sell it, if this goes bad, and then as your portfolio grows, you can pivot, right? So in the beginning, our exits were a little bit more limited. Hey, our first income property, what if it goes bad? Well, do we have enough buffer? Yeah, we can sell it. Okay, we'll still be good. We'll make them whole and we're good. As you start growing your portfolio, you can start having multiple exits. Well, if this one, something happens here, I've got this property with equity, I can literally refi it and pay them out. Okay, I've got another, like you can start doing that kind of stuff. But no matter what, before we touch a penny, a cent of any type of other people's money in creative financing, we've got that exit. Otherwise, we do not do the deal. So I cannot stress that enough. So what I'm getting at here, the glass half full with seller financing, with this higher, the 67 instead of the 50, I am finding that in my negotiations with sellers, with seller financing, or in regards to seller financing, I'm saying, especially this will be so true after June 25th, or once you get close to, come June 1st, June 5th, as you get closer to that date, realistically and logistically, you probably won't be able to close by that date. Like I know my lawyers and attorneys, they always say, Dave, give us at least 2 to 3 weeks. Even if I have cash, even if everything's golden, even they say, give us 2 to 3 weeks so we can do this properly and get you closed out. So that June 25th date, once you start getting within that, if you're getting financing, it's going to take you longer. But once you start getting close to there, you can literally start, in my opinion, and this is what I'm doing, this is what Mel and I are doing, we are negotiating seller financing even more, right? I never thought I would negotiate seller financing even more because I try and do it on every single deal if it makes sense. But now I'm literally saying, okay, and if there's any sellers here, by the way, that have buildings and want Mel and I to take a look at, I'm always looking at buying buildings, right? We keep buying buildings, always have, always will, and continue to do it, okay? And especially if you're interested in seller financing, okay? So there's a little plug. If you have a deal, DM me, and I would gladly take a look at it, especially if you're willing to hold financing. Now, when I'm having these conversations, and again, I'm not telling you what to do, but when you're having these conversations and you tell the seller, you know what, I'm pretending like we're past June 25th. Say, talk to your accountants, okay? Ask them what your tax liability will be. If you sell it to me and you get all the making it up here, you get all the proceeds of the funds of the sale, proceeds of the sale, and you get them all, okay? Ask your accountant what your tax burden will be. And then they can run the numbers and say, at the same time when they're doing that, now that the inclusion rate is no longer 50, it's now 67, right? 17% higher. Now ask them, what if I held a mortgage for someone for 2, 3, 5 years, right? In Canada, it's up to 5. In the States, it's a little more flexibility, but I'm talking Canada because of the higher inclusion rate here. I'll talk US in a bit, but tell them to do the math on that. So they still have to pay the tax. Like you're not escaping the tax. Like it is what it is. However, you are now spreading it. You can spread it up to 5 years. And that's what Mel and I show people all the time in our Action Family Mentoring program, how to do it correctly. But then we also have these conversations with the seller. So now instead of your 50% inclusion rate, spreading it over 5, it's going to be even more beneficial because they upped it to 67. So now, and again, the accountants will be able to show them actual numbers, but just get them to have that conversation. I believe it's going to be much easier from my preliminary convo since the actual what's the word I want to use? Announcement? Yeah, announcement. The conversations when I tell them to talk to the accountants and actually look at it, they are looking at seller financing a lot more closely than they were before. Something else I wanted to touch on. Does anyone have any questions on that? On the capital gains announcement, seller financing, why the change is not as good when you're selling, but could be better if you're holding seller financing, and why it's good for investors like me? Let me know if you have any questions on that, guys. And then I'll start talking about Ohio and I want to make sure I check my list. Yeah. Oh, I talked about the 250K. Yes, I want to talk about just some good mornings. Okay, good. You guys can hear me. Good mornings. I guess it's good morning or good afternoon, wherever you're located. Ohio. I want to talk about Ohio. Okay, so Mel and I have one asset in Ohio so far. And then we've got 2 offers in right now. One is on a duplex conversion, and then one is on a triplex. There are some very low price deals there. And our team is going to be focusing a lot more on that Ohio area because of that. We're able to see lifts, right? We're basically taking an asset from here, lift it in valuation, either refinance it and pay out the creative financing or sell it and pay out the creative financing, right? It just depends on your strategy. But we're going to be doing that a lot more. And we're going to be actually, you know what? I'll kind of say it here. I was going to save it for a couple of weeks from now. If you want to get on our email list, because the email list is where this is going to start coming out on. If you are interested to get access to deals that we're finding and then making accessible to our community, team, can you put the email link? The team will put the link to join our email list. And our email list, by the way, we give content. We release a YouTube video every week. You get access to it. There's a lot of training. There's a lot of free stuff. You get some behind the scenes pictures and stories and kind of more insight as to what Mel and I are doing. So team, put that link so people can join our email list if you want, guys. But it's going to be rolling out. We're just finalizing a couple of different things where we're going to be getting deals in Ohio and then making them available for our followers, our email list, our social media, our Action Family. The Action Family is going to get first crack at it, right? Our Action Family mentoring program members, they're going to get first crack at it. But because we always obviously want we love the Action Family. We love all our followers too. But if you want to get access to that and be in the know, in the loop, because these properties are going to go fast. Sorry, I shouldn't say that. I believe these properties will go fast because they will be deals that we've reviewed. And for whatever reason, they did not fit our portfolio at this time, and we're making available to people. Okay, so anyway, if you're interested in that, and I don't see the link yet, maybe the team's having a difficult time, but just send us a DM, and we can. And you know what? I might create a form for you guys. Again, I was only supposed to talk about this in a couple of weeks, but getting excited about it. So yeah, doing 2 deals right now in Ohio. I'll be releasing more details as they come out. Also doing Cape Coral, Florida. Oops. Oh, there you go. Thanks, team. Cape Coral, Florida as well. We're doing a flip there. Again, I live in North Bay, Ontario, Canada, right? Actually, no, the snow melted a month ago or so. But how are we able to do this, right? It's all through our Action Family mentoring program where we show people Florida, obviously an awesome state. In my opinion, people are flocking there. Oh gosh, I don't have the stats on me, but like the growth in population is just over the top, which is good. They can't build housing fast enough there. So again, different plays in different markets. We still buy multifamily there as well. We have a short-term rental in Orlando, and then we're doing a flip, in Cape Coral. So a lot of cool things going on. The U.S. has different, like I was talking, and again, please do not take this as financial advice or accounting advice or legal advice, but had our weekly meeting with the accountants and the CFO and talking about the Canadian portfolio and the US portfolio and Costa Rica. And it's just, I shouldn't say it's funny. It's interesting, the different, it's interesting, the nuances, I don't know if that's the word I want to use, just the differences between the Canadian tax code and the US tax code, right? The CRA versus the IRS. Yeah, there's different flexibilities on the U.S. side of things that on the Canadian side of things, not as, let's say the word flexible, I'll use that word. And Mel and I are investing in the U.S. So actually we have a webinar tomorrow night. We go live tomorrow night, 8 p.m. Eastern time. Team, if you can put the link for that for the webinar tomorrow. So we're just going to be chatting about exactly how we do this. We're going to go more in depth. Chatting about Mel and I's story, right? I used to be a firefighter. She worked at our local college here. We had a terrible, bad accident. We almost passed away, touch wood. That we had 18 properties, and thank goodness we did, because that allowed us to quit our jobs, right, and create the Action Family. But if we didn't have those properties, we would have had to continue. So we talk about that tomorrow in the webinar. We talk about how we're buying properties in the US. I'm seeing a lot of that. I'm having a lot of messages, DMs, because we're on all those platforms. And thank you for everyone that's following us. I believe we have, oh gosh, I think it's over 750,000 followers on all our platforms now. So, and we post different things, different places. So anyway, if you're not following us, please do. What was I going to say? I'm getting a lot of messages. Thanks, team, for putting the link in there. I'm getting a lot of messages of Canadians who are like, "Okay, I still want to invest in Canada," which I get. I'll always invest in Canada too. We're in 5 countries, but that are now starting to look in the US, right? And this is where the Action Family can help you. So we can show you how to do cross-border investment. If you're a Canadian and you want to do cross-border investments into the US, we can absolutely help you, right? Mel and I are in Texas, Florida, and Ohio. So we'll show you all the important stuff that you need, the nuances, the cross-border. Make sure you're not doing double taxation. Make sure your structure is done properly. I see, like, I'm on YouTube all the time, obviously. And I see a lot of information that, not the same info that my accountants and my lawyers and my cross-border and my attorneys and my CPAs give me. So you read between the lines there however you want. But anyway, and if you're a US citizen, you want to continue buying in the US, right? We can help you there as well. Our strategies work all over the place. Or if you want to buy in Costa Rica, just like Mel and I, we're actually doing, and again, you'll see this in our email list. So join the email list. You'll see some videos and some pictures. We'll eventually do a YouTube video as well. And you'll see Instagram stories when Mel and I travel out there to go check out the project. But we're buying a 10-unit boutique hotel in Costa Rica. It's oh gosh, I have a hard time pronouncing it. It's south of Tamarindo, so it's on the west side of Costa Rica. It's south of Tamarindo. Mel and I own properties already in Cocoa Beach. What is it again? Cocoa Beach, Ocotal, and oh gosh, come on, Dave. Anyway, but this one's more south. And it's a 10-unit boutique hotel. I can't wait to show you guys the seller financing deal that we got here. It is so sweet. And people will say, "Dave, you can't do seller financing. It doesn't work here." I hear that all the time. Here, I'll stop the rant. I'll finish on the boutique hotel, and I'll talk about how seller financing works everywhere. So we are buying with seller financing, very little down. I sent $25,000 to escrow last week, right, at a hockey tournament, still buying properties. Escrow, the $25K was sent. We are going to buy this property with $48,000 down. And then they are going to hold seller financing for 5 years. And our plan is, we're not going to run it as a hotel. We're going to run it as individual short-term rentals with a little bit of commercial units. We're upgrading the pool. It's a really cool spot. It's a really, really cool spot. And then we're probably going to sell it. So Mel and I dip into short-term rentals. I wouldn't say I'm a short-term rental guy. However, we do it in Costa Rica, Mexico, Dominican, and Orlando. But yeah, I'll be able to show you guys this. It's a pretty cool thing. Now, in regards to seller financing, I will hear this a lot. And it's not just Canada. It's not just US. It is, even sometimes I hear it in Costa Rica. Excuse me. People will say seller financing, creative financing doesn't work here. And I'm not saying, no, I disagree with them, but they don't know what they don't know. Some people will say it. I have lawyers sometimes that will tell me, "Hey, you can't do mortgages with RSPs," or that you can't do in the States, you can't do, mortgages with retirement funds. Yes, you can, right? It's just some people don't know how to do it, and it's not their fault. They just don't know what they don't know, right? So what I'm getting at here is this can work anywhere. We're doing seller financing in Canada. Some people say, "Oh, it doesn't work in this province." Yes, it does. "Oh, it doesn't work in this city." Yes, it does. So don't let people, tell you that. You just need to find it. Because if someone, at the end of the day, same with the US, in the States, right? Costa Rica, we've done it. The condo, the villa, no. The casa, yes. And this one, so this will be our third seller financing in Costa Rica. It does work. So just don't let people kind of bum you out and drag you down by saying it doesn't work, because it absolutely does. So I'll put it here. So this is that one's the link. So that link right there, guys, actually you get our free ebook. That link right there that's at the bottom, if you click on that, you get our free ebook. It's been an Amazon bestseller. So check it out. It's a short read. I think it's like, oh gosh, 88 pages. And then that will get you into our email list, and then you'll get all those exclusive emails and those offers and all the training and all the stuff that we've got coming on. Like I mentioned, the Ohio properties, and you'll see the videos of a Cape Coral project that we're doing. You'll see that before we actually release the YouTube video. So that's that. And then I wanted to, whoops, where'd it go here? What was the other link, team? For the webinar. Yes, for the webinar. I think it's this one. Yes, let me show it right now. Like I said, Mel and I go live tomorrow, 8 p.m. Eastern time. We might have to divide it and conquer our little guy as hockey, right? Hockey tryouts. If you're a parent or a hockey parent, you know what that's like. So we might have to divide and conquer. We'll see. But yeah, check it out. We literally talk about our strategies, how we do this. We're going to break down seller financing. We are going to break down how to use registered/retirement funds. We're going to talk about promissory notes. I know promissory notes right now, some people, promissory notes, some people have not been, loving the promissory note right now. And I'm not going to lie, I see it as, other forms of creative financing. And what I mean by that is, just like I see a mortgage, just like I see a registered fund, promissory note, the difference is there's no security behind it, right? Whereas a mortgage, you have a security, a lien on a property. The way that Mel and I do it, again, is any money. It doesn't matter to me in any form, any money that we borrow, we exit before we enter. So whether it's a mortgage, right? Yes, there's security. Yes, there's a lien, their first or second charge, on the deed, the property, the title, whatever you want to call it. I still have an exit. Just because there's a security or lien, as the borrower, I'm responsible to make sure that I pay people back. Like, the onus is on me to have a plan to make sure that I'm good to go, that I know I'm borrowing someone's hard-earned money and that I have to pay back. Like, it's a non-negotiable. So the way that Mel and I look at it is, whether I'm borrowing a mortgage from a seller, first or second position, whether I'm borrowing registered funds or retirement funds, whether I am using a promissory note, my approach does not change. You have to know how you're going to pay people back. And if you don't touch the money, right? So we show you how to do promissory notes the right way as well. There's, you have to make sure to use lawyers and make sure that you dot the I's, cross the T's, making sure that you're following all the securities and all that. So again, you have to do it right. Like, it's just, that's the thing, guys, is follow the rules, stay above board, do it right, be compliant, report everything. It's doing it right. So we talk about that. We talk about how we're buying properties. We talk about, actually, we show you a Costa Rica flip that we did. We made 104 USD on that one in a year, seller financing deal. Okay, so we talk about that one. We show you properties from the US and Canada. We also discuss, we'll just show you creative financing in the breakdown as well. So if you're not registered, yeah, thanks team for putting the webinar. If you are not registered, check it out. If you can't make it, if you're like, oh, Dave, tomorrow at 8 p.m. doesn't work for me, all good. Don't stress. If you register, I believe you get our free book as well if you register. But if you register and you cannot make it, do not stress. Our team is amazing. They will email you a replay link within, I think, I'll say 24 to give them time, but they email pretty quick after the fact, so you'll get it as well. So yeah, definitely check it out. Now, someone was asking me, where did I get that? Someone asked me, okay, sorry about that. Turnkey properties. Okay, so it's a little different than the other Ohio thing that we're doing. If ever you are looking for turnkey properties, team, put the link, and I have an exclusive list. So because you're part of the Investor Mel and Dave community, right? You're following us or you're watching us on social media right now, or if you're watching this after, thank you. We have a link, and team, if you can put it in the chat, this is a link of exclusive deals that you get. They go on here first before they go out to the general public. So because you found us, through the Investor Mel and Dave platform, we'll be able to share, the team will share it, and I'll post it on the live here as well. But if you're looking for a and this is US only, just so you know, this is US only. If you are looking for a turnkey income property provider, we'll be able to link you up. It's the same that we use. So basically they mostly, I think they're in, 13 states now, and it's mostly, they find the property, right? They do the legwork for you, to be honest with you. They find the property, they buy the property, they do the renovations, whatever needs to get done, they get it up to snuff, and then they sell you a turnkey investment, and they even manage it for you and get the tenants for you. So it's a really cool thing, especially if you're looking here. There it is. Let me show it. Yeah, check it out. And like I said, you get exclusive deals there before they go to the general public. So if you're looking, and it refreshes all the time. Excuse me, I forget how often it refreshes. But if you are interested in it, you're part of the Investor Mel and Dave community, or you're watching me right now or after, definitely take advantage. And if you're like, hey, Dave, I can't click on it or it doesn't work, just send us a DM and we'll send it to you as well. I just want to make sure I go through my list here with you guys. A couple other things. And again, if you have questions, do not be shy. Oh, yes. Okay. So I talked about the turkey. There's a couple of things. I made this list because I hadn't gone live for a while, and I wanted to make sure I touch on a couple of things. This will touch on what I was saying earlier. You know how I was saying a couple minutes ago when I was ranting or venting, whatever you want to call it, that I still hear a lot of people that say it doesn't work here. I can't find deals. My real estate agent, my lawyer, people at the local coffee shop, they all say the creative financing doesn't work here and I just can't do this and, it's too hard. So if you say it's too hard and you believe it's too hard, then it will be too hard, right? Like, just to be honest with you. However, like, mindset is such a huge thing. And Mel and I are such big believers. Anyone here believe in, law of attraction, or do anybody here do a journal or gratitude any single day? If yes, put it in the chat. Let me know what you do. But that's literally, oh, what did I just do here? There we go. Yeah, let me know as to what you do, because Mel and I, just again this morning, we did our journal, our gratitude list. We do it every single day. We believe that we can buy properties, therefore we can. So mindset is so actually, we have a whole mindset section that we discuss tomorrow on the webinar. So again, definitely check out the webinar if you haven't registered yet. But mindset is so important. Like, we have so many mindset coaches. Mel and I still have 4 coaches overall, and it is so important. It's, oh gosh, some people say it's almost like 90. I always said it was like an 80-20, right? 80% mindset, 20% actual action and knowledge and resources and kind of going for it. But I guess research has shown that it's actually higher than 80. So that 80-20 rule is mindset's even more powerful than we thought. So if you are thinking those things, I would say check yourself. Like, sometimes it's going to be, I can't do it, like I mentioned. I think you might need a mindset check. And we all get in those what's the word I want to use here? Slumps or downspout. I'm thinking of a building. Oh gosh, Dave, you talk real estate way too much. What am I thinking? Down, whatever, but definitely not downspouts. But if you are looking for a pick-me-up, team, put the link. These are people. I love these two. It's a couple. Mel and I have taken sessions with them. We've done a lot of different things with them. They help clarify a lot of different things for us. They don't do downspouts, like I said. Oh my gosh. But check them out. They help with mindset. So if you are a real estate investor and you're thinking, I haven't bought anything, because I have people that come to us, right, to the Action family. They might be new to Canada, new to the US, or they might have been here citizens, but they haven't taken action or bought anything. Or someone that, I got, like Mel and I, we had bought in a few buildings and the bank was saying no, right? No, you reached your limit. So if you are someone that's hit that roadblock and you don't think that you can do this, A, you're wrong, right? Mindset. B, we can help you. And C, that's what creative finance. Oh, there we go, team. Thanks, guys. That's why I love creative financing, because if you find deals and you're able to negotiate creative financing, the deal doesn't matter where you came from, doesn't matter how you found it, doesn't matter, if you have a doctorate or PhD, or if you got, how much schooling you have, like, and I'm, schooling is obviously important and good, but Mel and I aren't, well, Mel has more schooling than I, so I shouldn't say that. I think she went 4 years university. I have a 9-month firefighter certificate from Algonquin College in North Bay, in Ottawa. I don't have much schooling. So, you know what I'm saying? Like, if Mel and I have been able to amass, purchasing over 250 units and doing this in 5 countries, this is where the mindset comes in, because we believe we can, because we take action, and we've gotten training and coaching and mentoring, because no one knows everything. No one can do everything. And that's why Mel and I still have 4 coaches. Now, if you are going to learn from someone, if you're saying, hey, Dave, I like what you're saying, I want to learn from someone, obviously we have the Action Family Mentoring Program. Team, put a link, because you know what? If someone wants to change their life, again, I want you to attend the webinar, but put a link. You might want to book a call with us or our team and say, hey, Dave, I've been following you for a while, and you know what? The Action Family is what I need. But what I'm getting at is, if you are going to pick a coach or a mentor, I'll go over a couple of different things. A, are they doing what you want to do, right? Okay. B, have they been doing this for a long time? Mel and I have been doing this for a combined 25 years. We are not someone that had success in COVID and is all of a sudden coaching. Okay. We've been doing this for 25 years. We've had thousands of tenants over the years. We've had the good, the bad, the ugly. We're buying in 5 different countries. We're still buying. You know what I mean? I know some people don't continue to buy. Mel and I will always buy real estate. I'm obsessed with it, to be honest with you. What was I going to say? So people that are buying, people that are doing what you want to do, if you don't want to do it with joint ventures, that's Mel and I's specialty. We don't have joint venture partners. So again, I'm giving you some info. The other thing as well, when I pick my coaches and mentors, I will ask them different things, right? Because no one knows everything. Mel and I have 4 different coaches and mentors, because I believe if you pick a coach, they should also have a coach and mentor. When I have things, when I get into roadblocks, you know what I'm saying? I go to them, right, to help us. Jim, here, let me put Jim's question here. Jim has a question. I love to see multifamily home sale. I'm searching them myself too. Okay, awesome, Jim. Need someone around Southern Ontario to all the way to New Liskeard. Cool. So you're looking for an agent? Yeah, Jim, we've got our action agents. I've got a few agents that I'm thinking about. If you send us a DM, I'll be able to introduce you to a couple of real estate agents within our action agents that might be able to help you. But that's from Southern Ontario all the way to New Liskeard, even more north than I am. So that's where Mel's from, New Liskeard area. But cool. So team, and if you're interested in speaking more about, did I show it? About the Action Family, yeah, there's a call if ever you want to have a conversation further. And let me go to the chat. And if you're not registered for the webinar tomorrow, again, Mel and I are going live. What was I going to say? Oh, there's something that I'd mentioned here too. I can't think about it, but yeah, that's what I want to discuss today. I want to chat about the capital gains changes in Canada. The inclusion rate has gone from 50 to 67 effective June 25th. In my opinion, seller financing will be easier. It's already easy if you know how to negotiate it and show people numbers, but will be even easier as people will now be looking to, they still have to pay their taxes, but defer it over the period of time that they're allowed. So that's what I wanted to discuss. I want to go through some Q&A. If no one has any other questions, here, let me put the webinar. Where'd I go here? If anyone has any other questions, again, attend the webinar. We also do a Q&A. And if you're thinking, Patricia, yes. Yeah, let me know if you have a question, Patricia. But if anyone is thinking, I do have questions, or all this is so foreign to me, honestly, attend the webinar tonight, because we will break down deals. We'll go into more in depth in the concepts. Oh gosh, I'm losing it, guys. It's because we're planning a Luke Combs concert. It was going to be possibly at the end of May in Arizona, but now with some other changes, we might work out. We might go to Ohio instead and check out some of the properties. I think that one's in August or whatever, but that's why I got concert on the brain. But we'll go over the different concepts tomorrow. We'll actually share our screen, share some slides. We'll have some numbers. We'll have some breakdowns. So if you're visual like me, I need to see stuff, right? I need to see the numbers. I need to understand. So if you're visual like I am as well, definitely book to go to the webinar. And again, like I said, if you can't make it, it doesn't matter. It's cool. You still got our ebook, and then you will get the replay. So don't stress about it. You can't make it. You got kids. You got whatever it is they got going on. All good. You'll get the replay. You can book call with us to talk about different things. But yeah, Patricia. So no other questions. So awesome. Have an amazing rest of your Wednesday. Keep crushing it. Take the changes that are coming up with Glass Half Full, like we are. Make sure, again, as always, whenever you are touching any of anyone else's, even your own money, like you don't want to lose your own money either, but more importantly, you never want to lose someone else's. So whenever you are borrowing any type of creative financing, Remember that you have to exit the deal before you enter. I know that sounds cheesy, but I want you to remember it. And do not borrow money unless you have a strategic plan on how to pay it back. That's how people get burned. That's how people get hurt. And that's how people get in trouble. And that's what Mel and I do not do, right? We've always paid back every lender with interest on time, even ahead of time. And I strongly suggest you do the same. And if you want to learn more about how we do that, webinar tomorrow, visuals. We'll talk Canada, US, Costa Rica. We actually talk Dominican Republic there as well, and how we do things. Okay. So awesome. If you have any questions, if you're watching this, as a past recording, reach out to us as well. And yeah. So thanks, guys. Thanks for attending live.